Thank you, Mr. President. I want to discuss what everybody else is discussing these days. I say discussing or maybe even cussing, and that's gas prices, and more to the point, some unfortunate finger pointing that I think is going on in regards to our energy policies and why we see the increase that we are seeing at the gas pump, and really the role of speculation in regards to the futures market and the energy environment that we are now living in that is so challenging. I have the privilege of being the ranking member of the Agriculture Committee, which has jurisdiction over the Commodity Futures and Trading Commission. And I feel it is very important to address some of the claims being made by a number of my friends. From the rural farmer, Mr. President, commuter, Americans everywhere are obviously deeply impacted by high gas prices. That's the biggest and most often negative sign that we see when we drive anywhere. Whoops, we see all of a sudden that gas price has shot up, 10 cents. Unfortunately, I don't think that posturing or finger pointing does anything to really minimize the pain felt at the pumps. And Mr. President, like the annual planting and harvesting seasons in Kansas, a yearly occurrence happens here in Washington, D.C. for certain members of Congress to blame the commodity markets every time a particular commodity reaches an uncomfortable price level. You see a big price jump, why you obviously want to blame the commodity markets. It's easy to do. We saw it in the 70s during the gas lines in the Carter administration, the 80s, the 90s. It's the same old talking points. You could have the speech in the file, just pull out the file, cross out the date, and start making these points. But let's talk some economic facts, if I might. I don't think the populist rhetoric, it actually fails to acknowledge that everyone's money is the same color in the futures market. For every buyer, there is a seller. For every seller, there is a buyer. The historical problem for future markets and the hedgers who use them is that oftentimes, particularly in the deferred month contracts, there is not the liquidity or an adequate number of market participants to take the other side of a trade to allow the hedger to manage their deferred price risk. Market participants who actually provide this liquidity provide a valuable tool that allows producers and consumers of products to lock in their inventories well in advance, which can lead to lower costs to producers and certainly better prices for consumers. And if we have long speculation and the liquidity it provides is artificially driven from the market, the potential short-term advantage of lower prices could lead to shortages in production, higher demand, and even higher prices for both energy and agriculture commodities. Now, my point in this dissertation on futures markets 101 here is to emphasize that speculation is not manipulation. Speculation is trading to make a profit from anticipated price changes, either higher or lower. Manipulation, on the other hand, is intentionally acting to cause artificial price changes. As explained by the Commodity Futures and Trading Commission, the independent regulatory arbiter of excessive speculation, speculation is excessive when it causes any sudden or unreasonable fluctuations or unwarranted changes in the price of a commodity. In fact, the CFTC currently has the authority to regulate against price manipulation. So if you want to go to the people who are really in charge to make sure there isn't any manipulation, we already have the regulatory body, and they are doing exactly that. And it has had this authority since its creation by Congress in 1974. Furthermore, we have experts at the clearinghouses at the National Futures Association and at the CFTC, whose job it is to watch these markets minute by minute, hour by hour, day by day, to assure everybody that the discovery of prices between buyers and sellers is occurring openly and transparently. Yet when prices just so happen to move above what somebody in this body might think is reasonable or an uncomfortable level, we have a tendency to blame the participants in the market rather than the multitude of factors and the economic variables that these market participants react to each minute that the market is trading. Let's examine some of these real factors that are affecting our prices of energy. First off, there is tremendous increased demand outside of the United States, in particular Asia, China. They have caused the price of oil to rise rather dramatically. Even with the increased production in Canada, the United States, and Brazil, declines in the North Sea, Mexico, Sudan, and Libya have impacted the global supply. Second, our U.S. refining capacity has decreased as a result of stricter environmental regulations, where they get their crude from. Both have lowered the supply of gasoline enough to prop up prices. We see reports in the press every day about one refinery making it big and other refineries are having a lot of difficulty. Third, restricted domestic energy development on federal lands has disrupted our futures projections. Fourth, fear over Iran's nuclear weapons ambitions is leading to increased demands for gasoline. People try to stock up in anticipation of any supply disruption that would be based on the possibility of a conflict in the Middle East. And lastly, I would simply point out that blaming speculators ignores the inflationary aspects of the monetary policies of several central banks around the globe. It doesn't take a speculator to know that when the U.S. Treasury prints more money, it drives down the value of the dollar, drives up the price of raw materials and commodities like oil priced in dollars. Yet, despite these facts, we have too many who keep seeking a solution for a problem that simply isn't there. Now, what have the regulatory bodies found in their investigations as we look for somebody to blame? There have already been studies and investigations into whether excessive speculation is really manipulation, and they are manipulating prices. Now, let's just take a look at what they found. Last year, a Federal Trade Commission report on the manipulation of gas prices determined that none of the complaints investigated violated any FTC rules. A similar study by the CFTC stated that in its analysis, and I quote here, does not support the proposition that speculative activity has systemically driven changes in oil prices. And last but not least, the administration's own Financial Fraud Enforcement Task Force set out to investigate illegal speculation in the energy markets, and to date it has found none. Mr. President, the effects of high gas prices on our economic growth and on each individual business and family are certainly well understood. We should be finding effective solutions to fix a failed federal energy policy rather than trying to place the blame where it doesn't exist. And these solutions just don't stop at the increased domestic oil and gas production. They include implementation of workable environmental regulations. Unfortunately, the multitude of regulations under this administration are anything but workable. They're like a Katrina flooding virtually every part of the economic sector. That's all I hear about when I go back home to Kansas. There are a lot of things that are on people's minds, but regulation is number one. And I don't care what sector of the economy that we're talking about. There's a very real fear in my state that the new clean air regulations that we're just hearing about targeting coal-fired power plants could really disrupt our power grid. In a state that relies on coal for 75% of our power, this is just simply unacceptable. Then if we continue moving forward towards cleaner forms of energy, certainly we want to do that, but in a way that won't compromise the ability for Kansans or, for that matter, any citizen of any state to access affordable energy. This includes impending federal regulations on hydraulic fracturing, which will continue to play a huge role in my state's energy economy. In closing, Mr. President, on the larger topic of domestic energy companies, I think it's really unfortunate for elected officials to come to the floor, or for that matter, make a speech anywhere, and single out specific industries and private U.S. citizens even, for that matter, who employ millions of Americans and blame them for our energy woes. I think we're better than that. Let's remember that attacking their profits, it's an easy target. It isn't going to hurt the few top-level executives at these companies, but it will hurt middle-income Americans and retirees who make up over 90% of the ownership of so-called big oil or so-called big anything, and rely on their IRAs, their pension funds, and their mutual funds for their very livelihood. So these aren't privately held companies, so let's remember who actually owns these companies. It is our constituents. That's who it is. Thank you, Mr. President. I yield the floor. And I notice the absence of a quorum.
Clerk will call the